What a day, ladies and gentlemen. Big tech carries markets higher following the CPI report. Tesla's stock is lower, as well as a majority of our markets. So what's going on? Why is Tesla's stock down almost 2.5% at the time of recording this video? First up, there's a lot of crowding going on today. Big tech is seeing the inflows. The rest of the markets are seeing outflows. And whenever you have big tech, your super six, if you will, that's moving higher, it does skew the market. So if you look at the S&P, that's up about 0.5% at the time of recording this video, you would think, wow, that's a decent day for markets. No, it's a decent day for big tech. And when you have big tech that is really stealing the show, that does tend to negatively impact Tesla as well. First up, you had your CPI report that came out. We were expecting 0.2%. We got 0.2%, but it actually comes out as a decimal. So we were expecting 0.19%. We actually got 0.25%. So it came in a little bit higher than expected. Core year over year came in at 3.2%, along the lines of what we were expecting. Some people were expecting 3.2%, some were expecting 3.3%. So perhaps that was a little bit better than expected. Your headline month over month came in at 0.2%. We were expecting 0.2%. And year over year headline came in at 2.9%. We were expecting 3%. So not a great report, not a terrible report either. I do think this concentration in big tech really outperforming today is a little bit of a safety trade, perceived safety trade, heading into tomorrow's retail sales, because the areas that will get destroyed if retail sales come in low are the areas that are already selling off today. Big tech is seen as kind of that safety play if the economy does deteriorate from here. And I actually stand corrected. Core CPI rose 0.17% in July. It is also being reported today the U.S. Justice Department is considering a rare move to break up Google. According to Bloomberg, the move would be Washington's first push to dismantle a company for illegal monopolization in 20 plus years. And this report did bring Google down about 2.5% today. Wes, the Cybertruck lead engineer, says on X, Tesla's continued goal is to make it extremely easy to order a Cybertruck. It was overly complicated and has been simplified based on what we are producing today. Elon Musk posts a stunning photo of Tesla's headquarters taken this morning. Tesla ranks #1 in J.D. Power's 2024 U.S. Electric Vehicle Experience Public Charging Study. They say overall, both Tesla and non-Tesla owners find charging their vehicles at Tesla supercharger facilities is most satisfying, said Brent Gruber, executive director of the EV practice at J.D. Power. Non-Tesla owners, like those with EVs from Ford or Rivian, who now have access to the supercharger network, appreciate the ability to charge at the broad network of Tesla chargers that was previously unavailable to them. New York state officials are prepared to slash penalties for Tesla in coming years, even if the company fails to hire enough workers at its Giga New York plant and across the state. Under the company's current arrangement with the state, Tesla must employ 1,460 workers in Buffalo and 2,000 workers statewide, or else pay a $41 million fine. That deal, however, expires this year. According to details of a draft agreement, which could run through 2034, Tesla must employ 1,800 workers in Buffalo and 3,000 statewide. The current penalty will stay in place through 2029, but will drop to 10 million after that. Swedish electric vehicle maker Polestar has moved one step further in avoiding major tariffs imposed on Chinese-made cars on Wednesday, when the automaker said it began production of its Polestar 3 SUV in the United States. It is also reported that the Cybertruck has generated close to $2 billion in revenue for Tesla so far this year. Tesla said in its Q2 earnings report last month that the Cybertruck is on track to achieve profitability by the end of 2024. So the Cybertruck will stop being a net burden on Tesla's profitability, which in and of itself is a positive. Brad Sloan posts a new video of the parking lot at Giga Texas, and it looks like Cybertruck production is really starting to pick up. Here in this image alone, you have a couple hundred different Cybertrucks waiting to be loaded up and shipped out. I believe this is now the most Cybertrucks that we have ever seen in a single image. Volkswagen has decided to delay the launch of its flagship Project Trinity electric vehicle to early 2030s from 2026, reshuffling its EV rollout strategy in response to fluctuating market demands. Tom Lee and Funstrat say while bottoms are a process, a good July core CPI tilts risk on at least until Jackson Hole. There have been incremental positive developments in the past 24 hours, which increase the probabilities that a good July core CPI print today tilts equity markets to risk on at least until the Jackson Hole Economic Symposium on August 22nd. But let me be honest, I disagree. I do. I don't think CPI is the catalyst that causes markets to go risk on. It's the economy. It's retail sales. It's consumer spending data. It's Walmart's earnings report that will come out tomorrow. Those are the factors that will decide whether the next week or two are good or really freaking bad. Same is true for Tesla. Tesla is selling off over 3% now today. This could change by the time you guys see this video, but it's a pretty rough day out there for Tesla and for a lot of other stocks. And this to me is kind of a sign that Wall Street's worried about that retail sales report that comes out tomorrow, because the areas of the markets which would be most negatively affected by that presumed worse than expected retail sales report would be the areas that are selling off today, like Tesla, like consumer cyclical companies. Now, Tesla stock on a technical basis, you did break, continue to hold and break above the 200-day moving average for Tesla today. That was good, but you didn't make your way higher. You wanted to test this 50-day moving average. And again, this is not a good sign for markets coming tomorrow. It's just not, okay? I know some people just want to hear we're going straight to the moon. It's all up from here. But I'm just going to be honest with you. This does not look good so far. The fact that Tesla is not able to move higher on a slightly better than expected CPI report is not a good sign, no matter which way you want to put it. With that said, it's not all doom and gloom. As long as the retail sales report does not come in bad tomorrow, lower than expected, then I think markets can still do just fine here. Considering we're pretty much done with earnings season, besides Nvidia, the buyback period is going to start. We've already seen a 10% correction in the S&P. You've already started to bounce, quite a bit, over 5% from the lows. I do think the momentum at this point is skewed upwards, and stocks tend to follow the path of least resistance. So if retail sales come in okay tomorrow, then I think Tesla stock and the markets generally can trend higher. I will say it doesn't look as good though today, because you did get rejected at that 50-day moving average. That is at $543.62 on the SPY. You got rejected there and then came back down. So really that's the level you want to see if we hold above. It's this purple line here, the 50-day moving average. Always keep the 50-day, 100-day, and 200-day moving averages up on your trading platform, whatever you're using. I use Webull. If you use TradingView, does not matter. Keep those up there. And the fact that you got rejected at that 50-day moving average is, again, not a great sign of strength. I called this out many times here on the channel. I said that we were likely going to rally to that 50-day moving average. And then the question really is, do we break above that, or do we find resistance there? Sometimes you find resistance. Sometimes that's the level in which you really start to break out. For an example, back here on, what was this? This was April 29th, 2024. You hit that 50-day moving average. You found resistance. The next day, you dropped 1.5%. The next day after that, you dropped a third of 1%. And then you started to recover. And then you got above that 50-day moving average, and it was off to the races again. That's basically the same for every instance of the 50-day moving average. You either, find a lot of support there and then bounce, or you either find resistance and then fall. And it looks like this time you're finding a little bit of resistance at that level. But really, it's all going to come down to tomorrow's retail sales data and depending which way our markets go. Ernie on X says rent and OER together grew 0.39% in July. That's a pickup from the 0.27% in June. But even if June were an outlier, July was still the second lowest month-over-month read since December of 2021. Year-on-year rent and OER grew 5.3%, the lowest since May of 2022. Housing and CPI is stubbornly but clearly slowing. Timmerhouse reshares this and says rent was the stick in the mud on an otherwise good inflation report. Useful context from Ernie. Nick Timmerhouse says, what's the July CPI, or what does the July CPI mean for the Fed? July CPI extends a run of much cooler inflation and makes a September rate cut from the Fed as close to a lock as these things get. This report makes it easier at the margin to avoid dissents on the first cut. This report doesn't resolve the debate on whether to start with 25 basis points versus 50 basis points. To get to 50 basis points, you probably need to see something bad in the labor market. A big question for the September FOMC will be how many cuts are penciled in for the rest of the year. Remember, the September SEP is unusual because the SEP is calendar based. It's basically guiding on the path of policy at the November and December meetings. Mild inflation readings could make a 3-cut baseline more likely. So basically after this report, it's a little bit more likely that you get a cut September, a cut November, and a cut in December. New Zealand's central bank just made their first interest rate cut. They say the move was, quote, low risk and not a difficult decision, said the governor, Adrian Orr. Ryan Dietrich writes on X, the S&P 500 quickly back up to the 50-day moving average and area of that gap. Logical place to take a little break, but still constructive, and we think the lows were set last week. So basically saying don't be surprised if markets do fall in the coming days, but probably not down to those lows, which was a 10% correction from top to bottom. Again, it's all going to come down to Walmart earnings and retail sales tomorrow morning. As I've said from Sunday, retail sales and Walmart were the catalyst of this week. It was really never about CPI to begin with. Via the interesting flow sentiment today, using options from Big Money over on Ortex, we can see 9 different trades in Tesla totaling $1.84 million with a positive order value of 36%. So not a great day for option activity from Big Money. Tesla's short interest of free float is at 3.12%. You have $18.02 billion currently sold short in Tesla. Shares that are short at 86.71 million. And you have return shares today, 561,000, borrowed shares, 128,000. That means on net, you have about 432,000 shares that are actually being covered on today, which is, again, a good sign that shorts are covering as the stock is going down. It really just means that shorts don't want to keep shorting Tesla, that maybe they think there's limited downside at this point. And after all, Tesla has fallen sharply from $271 per share down to $200. You've already seen a lot of downside, so that makes sense that hedge funds and institutions are shorting. But if they were still really bearish on Tesla, they would be shorting more shares, not covering. So the fact that they are covering is a good sign. At least it's a good sign, just showing there's confidence from hedge funds and institutions that this could be getting closer to a bottom. Sentiment for Tesla stock today, surprisingly, is up to 72, which is bullish. Yesterday, it was bullish at 56, so a big jump in sentiment today. Message volume is coming in normal at 50. Yesterday, it was normal at 53, so a little bit lower message volume. And the participation ratio today is normal at 54. Google Trends data for the Tesla lineup continues to remain robust. The Model Y going from 24 to 26, the Model 3 going from 24 to 25. The Model S and the Model X staying the same here at 10 and 8 respectively. The Cybertruck is falling a little bit from 74 to 63, but I mean, in all reality, the Cybertruck is the most searched about Tesla product over the last 12 months. We should expect there's going to be volatility in the Cybertruck search trend data. Tesla continues to run about 4,000 different ads with Google. Tesla's global inventory numbers are now at the highest level they have been at least since May of this year. For the Model Y at about 7,200 vehicles in inventory. The Model 3's got about 6,000, the Model X at 3,800, and the Model S just staying pinned here at about 2,700. 10-year Treasury yields are declining even further, down to 3.81%. That's almost 4 basis points lower than where you were yesterday. And again, retail sales is really going to drive that home as well. If retail sales come in bad, 10-year Treasury yields are going to fall even more. Markets are currently pricing in a 58.0% chance of only one cut September. There is still a 42% chance of a 50 basis point rate cut in September. But again, a lot of that's going to come down to retail sales and the rest of the data that we get this month. We even have another CPI report that will come out before the Fed meeting around September 11th. The next Fed meeting is September 18th. So yeah, we have a lot of data still between now and the next Fed meeting. Percent of stocks currently trading above their 50-day moving average is down about 1% today. So 1% of all stocks are falling below their 50-day moving average. Currently, 47.17% of stocks are currently trading above their 50-day moving average. So in fact, the average stock is declining today. In other news for Tesla stock, we did get an analyst that did reiterate their $215 price target today and their hold rating. This analyst is William Stein from Truist Securities. So let me know what you think about all of this information down below in the comment section. It does look like Tesla stock is holding that $200 level, which is a good sign for now. That's really the level we want to hold. If we don't hold that level, then potentially a retest back down to that 100-day moving average is in play if retail sales come in bad or if Walmart has some bad things to say about the consumer. That would be Tesla going back down to about $192 per share. So let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.